Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, Chris Overholt, President and CEO at OverActive Media, ticker under Toronto Stock Exchange, OAM, and on the OTC under OAMCF. Chris, the floor is yours.
Great. Well, thank you, and good morning, everyone. Perhaps a little bit of background on myself first, just to give all of this a little bit of context. I'm 25 years in the professional sports space. Started my career with the Raptors in 1996 and grew to become a proud member of the Maple Leaf Sports and Entertainment team. From there, went down to Florida to run the business of the Florida Panthers, and soon thereafter moved over to the Dolphins to run the sales and marketing for the Miami Dolphins for 4 years. Subsequent to that, I joined the Canadian Olympic Committee as the CEO and ran that organization proudly over 4 Olympic Games in just about 9 years. I start there because it's relevant to the business model that I'm about to discuss and present, and to share with you a little bit about our view of the future of sports and entertainment. We are building a company, OverActive Media, as a 21st century sports, media, and entertainment company that will be modeled after the Madison Square Garden or Maple Leaf Sports and Entertainment. Again, a business model that has its roots and origin in professional sport for a new generation of fans, for today's generation of fans. And so in the fall of 2018, we set out to build a company that would be a global leader in the esports space, with a vision of building a sports media and entertainment company for today's generation of fans. And of course, you have to do that with great people. And so I would point you to those that we have set up as our operating group. I mentioned my background already. Adam Adamu is a co-founder of the business and brings tremendous experience in the early stage investment and venture capital space, which you can imagine would be really important in a nascent industry like the one that we're developing and growing every day. Allison Walker was with me at the Olympic Committee and ran our commercial business there. Went on to careers at Maple Leaf Sports and Bell Media, but has a strong orientation in sports marketing, big brand and media marketing. Rakesh and Tyler and Jorge, again, each of them steeped in sports marketing background and experience and or entrepreneurism. And so, again, a strong operating group that is providing leading results in the industry today. And so I want to make sure that we spend a little bit of time on the model that we've established for ourselves. And again, I want to emphasize that this is a traditional sports model, not only in the way that we approach our business every day and the manner in which we're building it, but as importantly, in the assets that we've chosen to invest in first. And so we have made investments in the biggest and most important esport competitive leagues in the world. They are the Overwatch League, the Call of Duty League, the League of Legends, and a league that we actually partially own with a couple of other team-based organizations called Flashpoint that plays a game called Counter-Strike. I say it very specifically that they're the biggest and most important leagues in the world because they are analogous to the professional sports leagues that we're all, of course, quite familiar with, whether that be the NBA, the NHL, the NFL. These are the only franchise league opportunities that exist in the world today in professional esports. They are the most competitive leagues. They are the highest expression of competitive play of esports generally in the world today. And again, I would draw analogies to the NBA and the NHL. These are franchise positions that you invest in and hold over a period of time, a long period of time, with a posture in the business economic model that allows you to share the revenues of these leagues as they grow. So at the very top of the scale, you have the opportunity to share in the broadcast rights deals, the marketing partnerships and licensing deals that the league does as a franchise holder. And you equally have the opportunity to build out your local business model in your respective markets, again, in much the same way that the Toronto Raptors or the Toronto Maple Leafs would be doing with their fan base. And so over time, you have the growth of an enterprise asset, again, that has a strong revenue share model rooted in these leagues, and you equally have the opportunity to hold a scarce asset over time that has a corresponding value, as you would imagine. These leagues are, again, very substantial. As an example, there are 240 million global players of Call of Duty in the world today, and the best 60 players in the world play in the Call of Duty League, and one of those teams is the 5 players that are represented by the Toronto Ultra. And so again, hopefully that gives you a sense of scale and scope of these professional leagues and how significantly valuable they are in the context of the broader industry. Like Madison Square Garden or Maple Leaf Sports, we have the same revenue streams, same focus on building out business and enterprise. We drive revenue and create value in the same ways. And so we create content. We will host, on the other side of COVID, live events here in the city of Toronto around our Overwatch team and our Call of Duty team. We produce digital live events for ourselves and for others in the industry through our OAM Live division. Like the Maple Leafs or the Raptors, we're in the sponsorship business just the same and have actually built a great roster of global partners now exceeding 20 on a global basis. And like those organizations, we are in the business of entertainment and expect to take that step in the next year or so. We're currently preparing to build a 7,200-seat performance venue here in the city of Toronto that will be the convenient home for our 2 esports teams, but also allow us to produce 180 to 200 events a year for the premium entertainment acts that land to the market. This now the 4th largest market in North America and the 5th global market for music and entertainment in the world today. And so again, as we build out this company in the years ahead, you will see us positioned in the sports, media, and entertainment space. Our sports delivery is these esports franchise teams that we've invested in and now own, and we have the distinction of being, in fact, the only company in the world that owns these assets. Of all of the organizations in the world today, we are, in fact, the only organization that owns a franchise position in each one of the available franchise leagues that exist today. As I said, we're in the content business, both live and digital live. We're in the brand and sponsorship business, and soon to be in the venue business. Just a quick glimpse of our background financially, and as we've been building the company over the last several years, but we've raised $104 million privately, significantly since the fall of 2018, most notably $40 million earlier this year in Q1 as part of our plan to go public, which we did materialize in the summer of this past year. So in July of 2021, we listed the company as a publicly traded company on the Toronto Venture Exchange. We drove just a little bit more than $8 million in revenue last year, and we have we provided guidance that we would seek to deliver more than $12 million in 2021, and we're on track to do just that. And again, we're growing this business both in audience and in revenues on a year-over-year basis that's consistent with the industry growth. And so if you're looking in on the industry generally, what you would know, and if you're familiar, you would know that it's been predicted to grow at double-digit CAGR over years since inception. And in fact, that has become a reality. But maybe as importantly is what the vehicles for revenue growth. Sponsorship and media rights have been the primary drivers of growth in the industry over time. And maybe, again, as importantly, the sponsorship deals that are getting done that support the industry are getting done by these leagues that we're invested in. So the biggest and most sustainable revenue streams have been coming to us through the rev share that we enjoy through these leagues because they're doing the biggest sponsorship deals in the industry. Said another way, if you are not invested in these leagues, then you're not getting an opportunity to share in the biggest revenue streams. And so, again, these franchise leagues are a differentiator for organizations that are invested in this space. We're also seeing, again, growth in the media rights business consistently over time. We've watched now Activision Blizzard do 2 separate media rights deals, the first $100 million deal with Twitch for just the Overwatch League in 2017, and subsequent to that, $160 million deal for Overwatch and Call of Duty on YouTube. Again, these are the only leagues that are realizing true broadcast rights in the spirit of a traditional sports model. And unless you're invested as we are in these franchises, you don't get a chance to share in those revenue streams. Finally, you'll note that digital streams have been historically relatively insignificant to the industry, but we certainly do expect incredible growth in this way. The advent of NFTs and the crypto space generally is certainly realizing and starting to realize very significant digital revenue opportunities. And so we expect to see that marketplace grow dramatically. And of course, we're well positioned inside of all of that to enjoy that benefit. And so how do we drive revenues? Again, media rights and partnerships are the key drivers to this business, just as they would be for any traditional sports league in the world. And they are high margin revenues. It doesn't cost us another dollar to accept our share of the media rights check from these leagues. Our partnerships business is strong and robust, and I would say world leading, and in fact is about 90% gross margin opportunity for us every time we do a deal. The events and content business tend to run around 60%, and our licensing model has been more of a Disney model where we basically license our IP out to others and then enjoy our points off the top. So again, enjoy a very high margin position in all of that. The fact that these revenue focuses are such high margin is a differentiator for us in our financial returns, and I'll show you how that impacts on the bottom line in just a few slides. So as we think about this audience that we're building out around these leagues and franchises, it's important to, again, draw a distinction and parallel to sports. Again, our business thesis was and is that these leagues will come to represent sport for a new generation of fans. That the fans today think about these Generation Z and millennials tend to think about this as their sport of choice. And the truth remains that, you know, the traditional sports leagues are aging out. They tend to be approaching or having already exceeded an audience that exceeds the age of 50. And that's just simply not as relevant to the major brands in the world today as would be these leagues in the esports space. Average age of our viewers tend to be between 23 and 25. Again, notably, these are global audience. The Overwatch League has 4 teams in China, 1 in London, 1 in Paris, 1 in Seoul, Korea. They're global leagues with global audiences, and so give us, again, reach on that basis and scale financially as these leagues grow and develop. And they're native digital, which, again, allows for significant scale as these leagues take shape. At the bottom, you'll notice a reference to the Overwatch League as being the fastest growing league in 2019 among the 18 to 34 segment, outstripping the growth in that segment against the NFL, the NBA, Major League Baseball, all of the other major leagues in the traditional sports space. And so while the model is very similar to traditional sport, the growth of the demographic is the key. The idea that, again, the Gen Z and soon Gen Alphas after them are paying more attention to these leagues, more attention to esport as their sport of choice will be a key differentiator in our model and the marketing of the industry to big brands as we have come to see already. This is a slide that for us goes back actually to 2017, but it's the very crux of our business thesis, and it reflects the again, at that time, the growing trend around the audience for global esports and the fact that it had already outstripped Major League Baseball and National Hockey League was a strong indication to us that there was an opportunity. Again, on the left, you see the esport audience, even back in 2017, at near 170 million. But what you'll notice on the right is that the average revenue per viewer had not yet even come close to the traditional sports audiences because those leagues are, of course, 75 to 100 years old, and they've managed to take broadcast rights and build out significant partnership revenues against their league enterprise. That's not true yet for esports, and while that number has moved from $5 per fan closer to 6 and 7 in North America already, it is the case that there's still lots of room to grow the average revenue per fan as that audience grows on the left side. And so again, you need to be invested in the right spaces, and we believe these leagues and our position as ownable franchises in our local markets is the most sustainable position in the ecosystem. And analogous to this would be the growth of the NBA back in the 90s. And so in the formidable years of David Stern's leadership as commissioner, we saw a number of team transactions in the late 80s and throughout the 90s. On the low end, you would have seen the Houston Rockets sold to Les Alexander and his group for about 85 million US. On the higher side, the Trailblazers and the Celtics were sold for more than 100 million. But if you throw out the highs and the lows and you normalize for inflation, you get the rough equivalent value of what we paid to acquire just one of our 4 franchises. And so in a world today where the average NBA franchise would not be worth less than $2 billion US, but where the average growth of the esport audience on a global basis is eclipsing the NBA in those days by 5 or 6 times the speed, we feel pretty great about the fact that we've got our arms around not one, but rather 4 of these franchises in these closed league models. And in fact, we're not the only ones that saw this opportunity. Robert Kraft was in fact the first traditional sports owner to make an investment in these same franchise leagues. He was the first to buy an Overwatch League franchise in 2017. And soon thereafter, the Cronkies and the Wilpons in New York, the Anschutz in LA, and Ted Leonis and Peter Guber, all of them followed suit, not only made investments in esports, but rather made investments in these very same leagues that we're invested in. They sit at the board of governors tables with us, and they have these positions inside Call of Duty and Overwatch and League of Legends right alongside our investments. And so if you believe, as I do, that successful people leave clues, then we feel pretty great about the company that we enjoy in these leagues. I mentioned earlier what a world-leading job our team has been doing in the sponsorship space, and again, reminding all of you that this is core to our strategy to drive revenue for reasons similar to the traditional sports model. This is very high margin revenue, and of course, given that age demographic and the relevance of that 18 to 24, 18 to 34 market, we know that that audience is relevant to brands, both endemic and non-endemic the world over. And so we set our sights early on developing reputation and good strategy to attract the biggest brands in the business today and to bring them over into esports as an opportunity. And we've been doing that consistently and very well for now almost 3 years. The first and biggest investment made here in Canada was Bell. Bell is, of course, for those who might be from elsewhere to Canada, our biggest integrated media company in the country. They not only saw their way fit to become our founding partner, our premier and founding partner with a multi-year, multi-million-dollar investment as a sponsor, but they made a $12 million investment in OverActive Media as a strategic partner and have been leveraging their great technology, Bell 5, and now soon their 5G technology, into the conversation with our broad audience of fans. Soon thereafter, Canon, Universal Music, Skip the Dishes, more recently TD Bank, Red Bull, Jack Links. These are all sponsors of OverActive Media. And again, what we've been doing very well is bringing non-endemic partners, partners that are interested in this audience, in today's generation of fans, bringing them into the space and making sense of it for them and delivering reach for their products and services to a new audience very effectively. We're out there every day, not competing candidly with other esports or gaming houses in the market space. We're competing with the Toronto Raptors and the Toronto Maple Leafs for the sponsorship dollars that they enjoy. And again, when that happens, we see that as a strong indication that we're absolutely on the right track, speaking to a new generation, a new audience. Of course, our industry attracts a decent amount of celebrity as well, and that's true for OverActive Media. It is also the case that, they've become part of our owner group, and the difference between us and many in the industry, it seems, is that we've insisted that all of ours write checks. So we've had the addition of a number of celebrities over the last 3 years. Abel, The Weeknd, was an early stage investor in OverActive Media. Mitch Marner and his group followed just last year. Again, all of our celebrity investors wrote checks to be part of our owner group and authentically connected to the business. Not listed here include Sidney Crosby, Phil Kessel, Carl Hagelin, The Montreal Canadiens are seven-figure investors in OverActive Media. The two guys on the right, I wouldn't expect that anyone on this call would know who they are, but those are the two biggest social media influencers in the gaming industry today in the Spanish world. Willie, Rex, and Vegeta have a combined 100 million followers across all of their platforms. But again, each of these celebrities, each of these notable personalities are attracted to this industry for all of what it represents, but to OverActive Media for our point of difference, as I've been explaining. And so a glimpse of our financials over the last several years. Again, 2018 was our founding year. 2019 was really our building year. We were acquiring our team assets and building out our operating group. We made also 3 small acquisitions in that year as well and gathered up modest revenues as part of same. 2020 was meant to be our first full operating year, but of course it was the case that COVID saw to that. But despite that fact, we managed to deliver $8 million in revenue. Our original projection was about 12, and so we lost our live event opportunity to grow the business in those ways. But again, delivered against the sponsorship and rev share business in the ways that we imagined. The impact of those high gross margin revenues are what you see on the right. You can see the EBITDA losses have been cut dramatically in the last couple of years. We've been very good to manage our expenses responsibly, as you would expect. But again, the impact of those high gross margin revenues, gross margin targets that are in excess of 80% are what are allowing us to build the business not only on the top line, but in the bottom line in a very accelerated fashion. And I mentioned earlier about our intention to take our bold step into the entertainment space. It is the case that we have been working for now a year and a half to develop our strategy around our venue here in Toronto. We will build a performance venue in the city of Toronto down on the Exhibition Place grounds. It'll be 7,200 seats. We saw this market opportunity as soon as we started the company. It's been the case for a long time now that Toronto is one of the premium destinations for the top music and entertainment acts that exist in the world today. But the fact is that they only have really one venue to play when they come to this great market, and it's busy 100 nights a year with Leafs Raptors sport. And so we took that as an opportunity to build not only a great home for our 2 eSport teams, the Defiant and the Ultra, but also to be able to produce 180 to 200 nights a year inside a brand new performance venue. You can understand how this might make sense. John Legend can show up to this market and play 2 nights in our venue at a premium price and create a premium experience for his fans, different than the one he can create in an arena. And so this step for us will allow us to compete every day head to head with Maple Leaf Sports for the top entertainment acts that land to the market. And finally, I started with people, and so appropriately I should end with these folks. Sheldon Pollack is our chairman and co-founder. Those that might be on the call who know Sheldon by reputation would know him to only have a sterling reputation in this industry and in the capital markets broadly. Builder of Onyx over years and the current sitting chairman of Acuity Ads. Again, Sheldon's reputation for high growth early stage opportunities is well understood. The Kimmels are very quietly one of Canada's billionaire families, and Mike Kimmel and his brother Jeffrey and his cousin Ryan are the 3rd generation of that family's wealth, and they have been great builders of community and of great businesses going back to textile business, retail textile business years ago through their grandfather, Westdale Properties and real estate business over recent years. And Mike and Jeffrey in particular have taken the family into the hospitality space. They own the Chase Restaurant Group here in Canada. They're partnered with David Grutman and Live Nation on a number of restaurant opportunities in South Florida and Miami, and most recently just opened a new hotel with Pharrell Williams and their partner group down there, the Good Time Hotel in North Miami. They were also early stage investors in the Pittsburgh Penguins when Mario opened it up to limited partner opportunities in 2016, and have just recently come out of that transaction as the Penguins have been sold to Fenway Sports Group. But the Kimmels, again, have a great reputation and have been very successful in the sports and entertainment hospitality space. And then finally, Rizwan Jamel, representing Bell's strategic interests in OverActive Media, as I mentioned earlier, a great strategic partner for years. And so, again, I'll wrap up there, but I would expect in all of that, what I would hope is that you come away with an understanding that we have a very distinct and unique position inside the global ecosystem. We have assets that others simply do not have, and as a result, we have a business model that has high gross margin attached to it that others do not have and cannot deliver. And we have great people and strategy attached to all of this that we think are going to put us in the most enduring position in the industry. Recognizing that there's not a moderator on this call, I'll just look quickly at Q&A to see for the questions, and I see a few here. So, yeah, I see a question around the growth opportunity for the company going forward. Thank you, Sheldon Kraft. Yeah, we see a number of opportunities that we're exploring. I said we're building a sports media and entertainment company. Our sports assets looked after by our early stage investments in the esports space, our future in the entertainment space addressed by our venue development strategy. It's the media area that we're focused on, and we see numbers of opportunities there that we're just starting to narrow now and expect to have news around the same in the first part of next year. We're looking at potential building out a multi-channel network, so as to extend and grow our distributed audience around our fan base. We're looking at opportunities for influence in gaming more broadly, and what we can do to build out a brand there. We see opportunities, frankly, to be in the creative space, the agency space, serving, again, broadly speaking, brands who are looking to reach today's generation of fans. This is our specialty, frankly. This is something we're very strong at, and we see an opportunity to build business around that. So those are three immediate opportunities that we see in front of us. We're also, like most others in our business, we're looking at the crypto NFT space and the crypto exchange space as opportunities for us as well, and seeming to have some great success there. On the vision side, over the next 12 months, thank you, Bobby Kraft, for that call. Again, I just shared some of where I think we're heading, but we see a tremendous growth in the digital space. We have, again, great fan base that scans the world over, and we did $1 million in digital skin sales last year without barely marketing that effort. So we see a lot of as the industry takes shape around the digital marketing space in particular, whether it be NFTs or skins within our industry, we see lots of opportunity there. I see a couple more questions here, but I think we're just. Yeah.
Sorry, Chris. We do have one question here as well. The question asks, what does it take to be a franchise owner in these leagues, and can anyone come and buy one?
Yeah, great question. It's not an easy process. Getting the capital together to acquire the franchise in the first instance, of course, in the early days of our company was a challenge. But we've done that and proven that we've done that successfully, such that the publishers now call us as they're thinking about new opportunities in this space. So we're pleased to be acknowledged as one of the global leaders in that way. But of course, you need to be able to sustain your operation and stand it up in the ways that we have. And again, there are a number of people that are looking to access these assets because they're scarce. In the same way that traditional sports will have over time, has demonstrated over time, builds a scarce value because there are only so many positions available in these leagues. Equally true for esports. These leagues will be capped out. There will be expansion in these leagues at some point, we think in the next couple of years. And when that happens, we get to share in those expansion fees and the corresponding revenues that spring from them. Again, the very same as a traditional sports model. But the ability for us to again, first qualify and meet the thresholds of the publishers as they stood these leagues up, to be able to acquire them and then sustain them, it's a very rare opportunity. Not everybody can qualify. If that were true, then our position would not be so unique in the marketplace today in the global ecosystem. There are only roughly 30 probably organizations that are attached to these franchise leagues. Many of them hold one or two, but we are we're in the unique position of holding all 4 of the franchise leagues that are available today. There are a couple of other questions, but we're out of time, I'm afraid. So at 11 o'clock, I'll need to wrap up there. But thank you, everybody, for your time and attention, and we'll be pleased to follow up with any particular questions or comments you might have on the backside of this. Thank you very much.